Welcome back to the Trading Apologist. My name is Tom, and today is Monday, December 1st, 2025, and we are back to recording every day this week to give you guys real-time market updates as the market continues to find its footing. And today was definitely an interesting day in markets. The first day of December did not disappoint, and the first day of December is historically a bearish day, just like we were talking about last week with the Wednesday before Thanksgiving, on average being a bullish day. Well, on average, the first day of December is a bearish day, and we saw a lot of overnight selling. Now, the market really did stabilize and came back strong just a couple hours after the market opened. But crypto, unfortunately, did not fare as well and saw aggressive overnight selling on fears of MicroStrategy potentially having to sell some of their Bitcoin. Now, if that is something that you are worried about, I would not be. I made a whole post on that today that is on my Patreon, running all of the numbers to give you a sense of just how much of a runway MicroStrategy does have. And I've just turned that on to be a free post. So if you do want to check that out, I'm going to link it into the description down below so you can check that out. And also, I have a free post listed at the top on developing a trading strategy. Just made that free for everybody because I think that is a very valuable one to consider. If you cannot clearly summarize your trading strategy in one page or a few sentences to define how you are trading, I would encourage you to spend some time to do that and to define what that strategy is, especially as markets get more volatile and we are going to have a tougher, more choppy trading environment next year. But with all that selling in the crypto space, we did break down a bit from the key support that we discussed last week for actually on Friday, going into the weekend for Solana and for Bitcoin. They did hold above the recent lows. So we do have higher lows currently and are recovering a bit, but the general structure just does look a bit weak, and I would still be careful around crypto at the moment. The broader market, however, the thesis I'm looking for there is that after the strong run we had last week, that we may see a pullback or a bit of chop for the first half of December, followed by more positive momentum later in the month. And that's confirmed by what we see in the charts, as well as a lot of historical signals and just stats on previous years that have had similar gains from January through November. But that aligns with 4-hour charts being overheated. We talked about that on Friday, and daily charts having a lot more room to run. And if we are looking at the broader market, semiconductors came back a bit today, but retail, particularly the apparel sector, has been flying, which is quite surprising when you consider all the talk of the stress that has been on consumers. Well, that seems to not be the case entirely when those retail stocks are still doing well. And something to consider as well, when an asset like Walmart is near all-time highs, that most likely means we are not in a recession. And if you recall the chart we looked at on the average market path after a rate cutting cycle starts, most of them are positive except for the recessionary path. And looking at the Walmart chart, at least, you would argue that we are not in a recession. So I am still bullish on higher prices in the year ahead. Crypto is obviously getting squeezed. There are lots of things happening in the background. Banking institutions, of course, don't like the lending services and the new markets that MicroStrategy is developing. Bitcoin is a threat in some way. Stablecoins are a threat in some way since they are used to handling and distributing all the cash printed by the government. And of course, they don't want to give up that line of their business. Anyway, today we are going to focus on a few key sectors that I think are going to outperform this month. And we're going to look at leading names within those sectors. If you are in the Patreon group and you were on our weekly market prep Zoom call this morning, this is going to be a bit of a recap, an abridged version of all the charts we went over, but you'll still want to tune in because there are a few key names where we were looking at setups this morning and they actually broke out already today. So markets move very quickly sometimes. So let's get right into it and look at the charts. This isn't financial advice. Past results are not indicative of future performance. Do your own research. All right, let's get right into it with the S&P 500 and the NASDAQ. And then I also want to go over XLV and retail sectors, healthcare, just to look at a few of those sectors to give you a feel of where everything stands. So if we look at the S&P 500, you can see that we had a bit of overnight selling here on Sunday, and we generally bounced from this support zone at about 6,800, which was our big hurdle that we were trying to get above. So overall, this is actually looking quite strong. For how overheated the 4-hour time frame was, I was honestly expecting a drop down a little lower to about 6,750, even as low as 6,700. To maintain this broader uptrend, we don't want to break, I would say it's a little below 6,700, but just for round numbers, we can say that that is our line in the sand to still maintain this uptrend on the 4-hour chart. But the fact that the market held above 6,800 is showing a lot of strength. And while we've been talking about a pullback, we should keep our minds open to the idea of just an orderly flag style consolidation that could eventually lead to that next breakout. So that is definitely something to look out for. And then you'll just have to break it down to the individual names and sectors you are looking at to determine those support levels. And if we don't get this bigger pullback, you might have to enter at slightly higher prices, but definitely keep your eyes on this. My money would still be on a bit more of a pullback, at least to that 6,750 zone, but let's see what tomorrow and Wednesday bring. All right, moving over to the NASDAQ, and you can see a very similar structure, but it has been weaker today, just like it was the last several weeks, whereas we held above this pivot high from the 17th of November on the S&P 500. The NASDAQ broke back below that, but for all intents and purposes, held this major zone at 25,250, and we closed the day back above that 25,400, just underneath, but close enough there on the NASDAQ. So also showing strength, slightly lower high from that drop down on Sunday, but still holding up well. So again, let's just see what this does on Tuesday. And that equivalent support for where we would see that 6,750 on the S&P 500 would be that even 25,000 level on the NASDAQ. And then the next line below that would be about 24,800. Really, the NASDAQ could drop down all the way to 24,700 and still maintain this broader uptrend without breaking those previous lows, and could bounce from there. All right, starting on SMH, just to look at a few of those sectors, and you can see we also had a bit of a pullback going into Monday morning, and then bounced and recovered a bit stronger than the S&P 500 and the NASDAQ. So a bit of strength maintaining for the semiconductor space, and we still need to pass, while we broke this pivot high here from the 20th of November, our next hurdle would be at about 356 to 360 to pass these previous swing highs. But all in all, you can't say the structure looks bad. We are a little bit overheated in terms of mean reversion, but the 4-hour RSI has a bit more room to run. And the next, honestly, major overhead resistance would be at that $360 level. All right, as we look at the remaining sectors, I'm just going to stay on the daily chart to talk about these broadly. Healthcare is still in an uptrend and sold off Friday and today a little bit to cool off, but we are still above this previous consolidation zone. So nothing to worry about there yet on healthcare, but mean reversion and RSI are a bit extended, so it wouldn't surprise me to see this cool off a little bit more. XLF for financials has really been chopping around sideways since June and hasn't figured out if it's going to go on the bullish or bearish side of the market. If we are just looking at this little bit of a trend, yes, we are currently in a downtrend with lower highs and lower lows the whole way through. So we're pulling back right now, but we are fairly oversold in terms of mean reversion. We're pretty diverted to the downside, and RSI you would consider very neutral on the daily for the financial sector. Now, if we look at biotech is still performing well. Held up better on Friday than healthcare, but sold off a little bit today, but is also a bit overheated and has a bearish divergence, barely, I guess hidden bearish divergence on the daily RSI. And the one I want to look at that we haven't really looked at much before is retail, XRT. And you can see since some of the retail earnings last week, this has just been flying. I mean, it's been performing fairly well since April and then had a pullback starting in September and now is starting to recover. We still need to break this previous swing high from the 25th of October at $86, but it looks like we are well on our way to do that, and we have plenty of room to move on the daily time frame. All right, if we're just discussing market volatility, the VIX is still dropping off. We had a little bit of a bounce up today, but dropped off throughout the day as the market found its footing. We're now back in fairly neutral territory, and I imagine after this big 5-day drop, just some consolidation in terms of overlapping candles for the time being. And if we look at MOVE, which is essentially bond insurance, that had a tick up today, but broadly speaking has also been selling off, which is telling you that volatility and risk is decreasing when MOVE is dropping. So those are two great indicators you can watch just for market stability and volatility coming out of the trading environment. And last couple things before we get into the charts. So the dollar broke down a little bit today, but held support right almost to the cent at 99. Now, we did have this little double top in play here at 100.3, 100.4, which this area has provided a bit of resistance for us in the past. I honestly thought the dollar would head a bit higher, but it looks like it is breaking down. But until we pass this previous swing low at 99, that downtrend is not confirmed, but this would be, if it breaks down, a tailwind both for risk assets and for metals, which we'll look at in just a little bit. And then if we pivot over to gold, gold continued to perform well. I guess here is Monday. It was fairly neutral, but it's still been performing well. And we had that breakout last week from this symmetrical triangle. Just drawing it in again here because for some reason it got lost off of my charts. So there is our symmetrical triangle for gold. And when we mapped out that move to the upside, that was getting us to 4,700. Silver is still in the lead, had another big day up on Monday. Now overnight on Tuesday, it is pulling back a little bit, but the metals are still performing quite strong. All right, starting here in the semiconductor space, and I've got NVIDIA pulled up first. Before we get into it, I just want to preface the conversation a little bit. I'm going to spend most of the time on the 4-hour chart, and just know that after these 6 weeks we've had down now, NVIDIA peaked later in late October, so it's only been down for about a month. But many of the assets we are going to look at peaked in the second or third week of October, so a bit earlier. But the point is the daily chart, most of them have mean reversion dots. Their RSI is reset, not in the case of NVIDIA here because it's been stronger, but the RSIs are reset to the bottom of the range. And we're looking at the 4-hour to get closer to the price action. For a lot of these assets, I will also have fib levels pulled up. And just as a recap, if you're not familiar, the way to think about these, if we're above the 50%, we're in the stronger half of the range. Below the 50%, we're in the weaker half of the range. Some of the assets we'll look at will have had a dramatic pullback like this. And if an asset, generally speaking, bounces from the 50% or above, it has a very good shot of making fresh all-time highs. If we break below to the 382, it's still possible, but sometimes it needs to chop around a little bit, find its footing, and eventually make those fresh all-time highs. But if we drop all the way down to the 236, it's less likely. And even if we have an aggressive bounce, we're most likely going to enter a tightening range or eventually some kind of downtrend for that asset. So that is one thing to keep in mind. And we are going to look at a few names that are more volatile. So I'm thinking about the quantum stocks, Bitcoin miners, some of the metals plays as well, where they've had these aggressive moves and have come all the way back down to the 236. And you might be wondering, why are you talking about a trade there? Well, a lot of them will have the 200-day moving average coming in at that juncture. And a bounce even to the 618 would be an over 100% move, and we're very oversold. So I'm thinking of those as a trade, just a short-term trade on that asset, not a long-term hold investment. And there can be a very meaningful chunk to take out of a recovery bounce like that. And just know that the most likely scenario after an aggressive drop is forming that daily or even that weekly lower high and either entering a tightening range or eventually turning into a downtrend. So despite the most likely scenario, we can still take part in that trade. And those are the shorter term trades I'll be talking about. And then charts that look a bit different than that will be the longer term trades. I'll try to remember to call that out, but just a bit of groundwork for you there. Now, if we are looking at NVIDIA is still finding support at the Confluence Model Center Cloud, and we haven't even gotten down to the 618. If we go into the 4-hour chart, which I think this is the more important time frame for us currently on NVIDIA, we are currently, and I hit the wrong button, take two, we are currently in the Confluence Model lower cloud, and we have more room to reset on the 4-hour RSI. This has been weaker than some of the other assets, and the rule is that when we break into the Confluence Model Center Cloud, we normally see 2 to 3 swings. So we've just completed one swing. Are we going to see at least one more, maybe get down to the 1618 at 164? That is quite possible. Now, if we do break right above into the center cloud, that's telling you that the asset is really strong and to expect the correction to turn around now. But that is very rare. You don't often see that. You normally see those 2 or 3 swings. But we do have early signs of a recovery on the 4-hour, just in terms of we are still making lower highs, but we made our first higher low right here today. So if this can move back up, you could make an argument for a very small inverse head and shoulders shaping up here on NVIDIA, and then you can map out that price target to the upside. I'm not going to do it exactly, but I'm assuming somewhere around 194 is where that would get you. But if we break down to the downside and we're looking for support down below for that next swing, we were saying potentially 164, which makes a lot of sense. We would want to try to hold that swing low from the 5th of September. And if we break below there, there isn't going to be much support until we get to about 150. You will intersect the 200-day moving average, but just be ready for that. I don't think it's likely we get down there, but at least one more swing, and then we talked about that volume gap on Friday. So NVIDIA, unfortunately, still looking a bit weak for the semiconductor space, but ones that I do like in terms of the best setups right now, and I'm not going to go over all the names, LAES, whoops, I can't type because my microphone's on top of my keyboard. Oh, streamer problems, you guys. Streamer problems. All right, LAES. So it pulled back a little bit today, but we were interested in this morning because it had just broken back into the Confluence Model Center Cloud and looked like it had confirmed an inverse head and shoulders. I honestly haven't looked at this all day. Broke down a little bit, but we haven't broken this right shoulder. So watch this one tomorrow. If we can find support at the Confluence Model Center Cloud here, there's a good chance that this bounce can continue, and this pattern would be pointing to the 50% level right around 550 to 560 from the current price of $4.18. That would be a nice little short-term move of just over 30%. So one to watch out for just a little recovery play. And then I imagine we would find some resistance there, maybe pull back. But if you do look at this one on the daily, it has a lot of room to run on the daily, and we found support right there on the 200-day moving average. But this is one of those that has broken down quite dramatically. So 50%, I'd be happy to take profits from a trade there. Maybe we can get up to the 1618, but I wouldn't expect all-time highs right away. This is going to take some time for LAES. Now, ALAB. This is one of the most promising ones that I got into a trade on today, and I've been watching it, and we're already up 30% from the lows. But I believe we talked about on Friday this falling wedge pattern here with the breakout to the upside. And now, since we got that breakout, because we just measured it and mapped it out on Friday, now we can actually put it on our breakout, and it gets us near all-time highs at 157. I might not be measuring that right because I was getting 159 earlier on my other chart. Let's just see if I can sharpen that up there. But anyway, for all intents and purposes, we broke out, and I got in at the end of the day. I'm just going to move that as we were back testing the breakout and then bounced in after hours. So it's still looking strong. The 4 hour is getting a bit overheated, so it could cool off. And I only entered about 20% of the position I want to. So if it moves up tomorrow and rejects a little bit and comes back down to the 50% at around 150, I would add to my calls. And I'm just playing this for this short-term recovery play, and might roll some of those options, those call options, into shares. I'll have to think about that. But the analyst price target for this, I think, is sitting at around 240. So it is definitely undervalued. And we broke out on a 1, 2, 3, 4th time retest of this trend line. So this one is looking like a decent setup. Okay, PANW is another bounce play where we bounced off of this trend line. We are oversold on RSI on the daily, mean reversion dot, and we already flipped the trend on the 4 hour. But the reason I'm looking at this one on the daily, I think it could bounce, and we've generally been in this uptrend where we've been making higher highs really the whole way up, even though we broke to lower lows here in April, but the whole market broke down in April. So it's just been in this steady stair step building up structure. It's not the most exciting high flyer in the world, but for a recovery play, even if we just get to the top of the trend line from where we are currently, that would be about 20% to the upside. So with options, that would be quite magnified. And we just need to be on rising wedge watch here, because we do have a rising wedge in play. Statistically, they do break more to the downside, but in a strong market like this, I've been seeing more and more rising wedges break to the upside. So keep an eye on that. And earnings were, fairly positive there. Now a little bit of a beat, 4.3% beat, not the most exciting in the world, but a steady, safe trade, and you have your invalidation just below this trend line. All right, and last one to look at is ASML, which has been very strong, and I'm embarrassed to say that I got out of my call options too early. I got in just after April, and I think I exited way back here at 822, and now we're way up at almost 1100. But we've been in this consolidation range and are potentially breaking to the upside, which could get us all the way to 1300. So this is another one I'm watching here on ASML, and actually a very similar pattern to AVGO, which is a bit overextended, pulled back today to that previous breakout, but looks like it might break out of this consolidation that's been in since October. Back tested it today. So if you are so inclined, this one has been outperforming NVIDIA. All right, let's look at quantum names. And the key setups I'm looking at with quantum is that they're all back testing previous support. In this case for RGTI at about 21, oversold on the daily. And if we go into the 4 hour, just to look at this, I thought it might have a shot at breaking out today. It hasn't quite yet, but there is potentially an inverse head and shoulders in play. So watch this one. And on the daily, we've had multiple inside bars. So there is volatility that is going to be coming into this name soon. And if we go down the list, I would say QBTS is the strongest overall in the space, just in terms of the chart structure from 2024, just stair-stepping its way up. A bit of a pullback now, but again, where this bounced was this previous consolidation zone. We're oversold. And then IONQ would be the other one where we had this diagonal resistance breakout that we back tested and are bouncing from. And same actual setup here. Didn't pull it back as much as RGTI, but potential for an inverse head and shoulders. So another one to watch. The trend on the 4 hours already flipped. We do have a mean reversion dot, so look for a bit of a pullback, but I think it can mount that recovery. And then QUBT is the weakest of the space, but it has had some very meaningful bounces. So where others have bounced, say in this upper territory here, QBTS has broken down. It bounced from this consolidation zone from April and when compared to our other charts, it's just chopped around a lot more, and even just had this weak breakout where it couldn't go on a run with the rest of the space. But some of these bounces, like the bounce it saw last week or the week before, 42%. It did that in like 3 days. So if you are comfortable trading on the shorter time frames, there can be some very meaningful moves in the quantum space. All right, I'm going to jump ahead to the metals space just because it has some similar charts to the quantum space. And if we start with CLF, which has been one of my favorites, even though it did have a decent pullback after this attempted breakout, but it's also been in a massive falling wedge, deviated a little bit, and now is looking to recover. And this is on the weekly time frame that we're looking at this on. But on the daily, just from the 7th of November, we've bounced all the way from $10 to $13. So a nice gain there. And we have 3 patterns in play. We still have this head and shoulders, or I'm sorry, inverse head and shoulders in play, which we broke out from and then broke back below. We didn't break this previous shoulder, so still just barely in play. And the target from that one was sitting up at about $19. And then we have the breakout from the falling wedge, which I guess we should really map out there or to wherever we end up breaking out from now, which is sitting all the way up at $35. So a pretty juicy potential price target. There is also a little bit of a cup and handle in play that hasn't quite confirmed yet, but we'll talk about that another time. And then if we're looking at Vail, Vail is still looking strong as well. Most of these I need to go to the weekly to be able to see all of this, but we've broken out from this long-standing downtrend. We're in the upper cloud on the weekly. I imagine as this rounds out, we're going to need to chop around a little bit, but this seems like it could eventually head into an uptrend here on Vail. RIO is still looking strong as well. I don't know what happened to my trend line here, but it got all kinds of messed up. Let's draw that back in. All right. I don't know why that got all crazy on me, but RIO had this breakout a couple of weeks ago. We've been in this name. We back tested that area for support perfectly and have been in a gradual uptrend and grind. And we have lots of room to run on the daily. On the weekly, we do have a mean reversion dot. We're to the top of the range here, but we can get much more extended because we're just getting back into the upper cloud here on the weekly. I think we can go a little bit more. Maybe we chop around and cool off a little bit, but it seems like this is also going to head higher eventually. And then last couple ones here, BHP, very similar setup. Let's go to the weekly again. And the weekly is kind of messy, but a lot of these have been doing the same things where they've been in multi-month downtrends that they're just breaking out from, and this is trying to get into the upper cloud. And then AQMS and CRML, those are very small market cap, so we won't get into those, but there are some interesting trades there too. Just watch out because the liquidity is pretty thin on those. I'll just go rapid fire here really quickly on rare earths and lithium. So USAR had a very dramatic pullback, but is very oversold on the daily and is attempting to bounce from the Confluence Model Center Cloud. Found a bit of resistance from the underside of the 200-day moving average. I would wait for this to give you a sign to enter in terms of setting that daily high or low and starting to recover, but it looks like this trend is soon going to flip. LAC, Lithium America Corp, I was concerned about this gap that it might get filled, but we have found strong support and are now entering a daily uptrend again at these previous highs here from November of 24 at $4.50. So I imagine we're going to get at least up to $6.30 at the Confluence Model Center Cloud, which corresponds with some of the lows in this consolidation range. And then we'll have to take it from there to see if it can break through. REMX, this one is looking really strong. It had a bit of a sharp correction. You could argue that there's an inverse head and shoulders going on in here, and it's trying to break out above this range at $74. The daily has room to move. The weekly is a bit extended from this strong recovery that it's had, and we've been talking about this since, gosh, when was it? back in this neighborhood all the way in July over the summer, and it has been a strong performer. But if this does just consolidate a bit more in this range, that wouldn't be a bad thing on the weekly, and then it would have more room to run. And this is really just the first swing it's taking in the upper band, and then we can take a couple moves higher. So watch for a breakout from this zone. And then UUU is a bit weaker if memory serves, and if internet will load. All right, there we are on UUU on the daily. We bounced from the 236 level. We are still in a downtrend on UUU in terms of lower highs, lower lows. So let's see if this can turn around, and if it can bounce, I think we'll get some resistance at 1876. But some of the other names are looking slightly more promising to me just based on where this is sitting on the weekly. It feels like it still needs to come in a little bit because it got to almost 5 standard deviations overbought on the weekly. All right, last sector before we get into a couple individual names and crypto, and we'll start with Hood here in the fintech space. And Hood had almost a 30% bounce, very impressive, but we had a gap down today. It seems like after this long run up, we've got a confluence model upper cloud with resistance at 135. We've got support down at 105. I wouldn't be surprised just to see this chop around and tighten up a little bit while the market gets its footing right now. And that would be a perfectly healthy thing. But you can see that Hood is still much stronger than Coin. Coin on the daily is in the confluence model lower band, just took the first swing, might be taking that second swing. And even though we're oversold here on RSI and we have a mean reversion dot, it could still take that second swing, and we could just start forming that bullish divergence on the RSI. The last times that Coin corrected, it chopped around at the bottom of the range for quite some time, and you can see still dragged down in price a little bit, and the crypto space is weak, so something to be cautious of. But one that looks interesting is NU. This just had a breakout of this range here, and they work in the digital payments space. And if we were just to draw a trend line across the top right here, you can see that we have a very nice cup and handle pattern on this one, which would be getting us a target up at around $31. I'm moving fast, so I'm not drawing it in here. Well, you know what? Why not? Let's draw it in. And then we'll just map that out to the breakout point. And we had a little bit of a close above this neckline last week. And I'm sorry, I can't remember. Good thing I mapped it out. $24, not $31. So I think that is about a 30% move. Is that what I was getting my wires crossed with? 44% move. I don't know. I can't do numbers anymore, you guys. All right, so 44% move to the upside from the breakout. Hold on. I'm going to figure this out. 36% move from our current prices. That's where I got the 30 number in my head. All right, I'm not completely crazy. I'm a little fried, but I'm not completely crazy. But another one for a great breakout play here. Yes, we are elevated on the daily RSI, but in terms of mean reversion, we have plenty of room to run. And I would say the weekly looks like it has quite a bit more that it can go compared to some of these previous highs here. So NU, it's another new one and a good one to keep on your radar for this breakout move. You know what? Unless I forget, I almost forgot to talk about the Bitcoin miners. So CleanSpark today rejected from the 50% that we were talking about on Friday. I took profits from that options trade earlier than I thought, but it was up 104%. Still got a lot of my position, but this should cool off a little bit. It really just consolidated for us today on the 4-hour. It's got a lot of room left to run on the daily. So I'm like, is this just going to break through and get all the way to 17 or 18 bucks? Really 17 would be that next target at these previous lows in the next fib level. But I'm hoping it cools off a bit so I can get more of an entry for that next eventual bounce. But CleanSpark is looking good and is catching up. In terms of other names in the space, Cypher and Iron have been leading. Cypher, look at it bounce off the 50% and watch that recovery. Now look at Iron in contrast, bounce off the 50%, not much of a recovery. So it's clearly lagging. And the standout has been Wolf, which has bounced much stronger. Didn't even get down to the 50%. Higher bounce, closer to all-time highs. So the strength is clearly in Wolf. Yes, we are a bit overextended, and the CEO also owns a energy company. So I think that's a bit of a tailwind for them. But looking at these for strength compared to names that we had been tracking, like BitDeer, for instance, or Mara, really not holding up well at all. And I actually don't even have it in the list. I think Riot is one of the ones that's holding up a bit better. Nope, Riot is also not. It's bouncing more, but it really had a pullback. You know what? And let's just add this to the watch list. Why not? All right, just catching up on a couple of the active trades. So Deckers finally had a strong move today, up over 10%. Now we are getting close to our breakdown zone. I am back to being in profit because I had bought in this territory here for the bounce, ended up breaking down on earnings, bought again down here. So my average cost now is at about $88 and change. So I'm just above that. And we are overextended on the 4-hour. So I'm thinking of taking some profits tomorrow, getting into this now resistance zone, which is coming in at that $93, which is what played support for us for months and months. And then we broke down from that. So if you have a longer term view of this, I think it is going to recover more over the months ahead, but my options expire in March of next year. So I would rather get out of those and then on a pullback, get options with a bit more time, maybe out to the fall of 2026 to give myself that time. And if we are looking on the daily, while it's coming up to the top of the range, it still has a lot of room to run. So yeah, just a quick update, I guess, there on Deckers and what to look out for. And the other one I want to cover, a bit of a day of indecision for Unity, but it tested fresh recovery highs, broke our swing high from the 7th of November. So that is a good sign. We didn't close above it, but this is a contender with that high that we saw on the 10th of November for the highest daily close recently. And it's good to see that we're testing those higher prices. And I still think in this local swing, we're going to pass the swing top from the 16th and head up at least to 48. I'm targeting about 50 for the next resistance, and 66 is our ultimate breakout target. All right, I have to cover Tesla because I don't want to upset anyone, but there's not much to say on Tesla. It's just been chopping around in a bit of indecision. We had the breakout from our 4-hour RSI that we back tested for support. We do have some mean reversion dots. I think this is going to do what the broader market does. I'm just looking at this. Yeah, we're still below resistance for our daily RSI. So it's a bit in no man's land, and up to 140, we could still be in a downtrend and in the confluence model lower cloud. So don't get too excited with a bounce up to 140. But if we break above 450, I was just saying 140. God, I'm tired. 440. Getting above 450 would have me more convinced that we are going to test fresh high prices, but it still has some proving to do. Okay, MicroStrategy. I'm zoomed way in to the 4-hour time frame, and this has been our consolidation lows. The lows that we were holding at 165 breached today only briefly and then recovered, and we saw quite a strong recovery, almost closing this gap down. That would be at 177. But the thing that's notable about this that I want you to pay attention to, breaking this low isn't good, but this candle is a bullish candle just in terms of this hammer and all the buying that stepped in. And the thing I want you to pay attention to is the volume candle. And look at that spike in volume. That is one of the largest volume candles we've had for a long time in MicroStrategy. I think if we look at all of MicroStrategy's history, I mean, we've got a cluster of days on this run up, but outside of that run up, outside of our last blow off top, this turning point here at the tariff lows in April, I don't think there are many, maybe I suppose this low right here. I can't remember what happened in July of 24. I know this was the yen carry trade. What happened in July? I don't know. But this is a notable volume candle. And this daily candle, this hammer with the buying support stepping in, and a volume candle, this can often lead to turnaround points. And if we are looking just at the charts and how oversold we are on the daily RSI, how deviated mean reversion is to the lower end, we would expect a bounce coming in. Of course, this is going to be contingent upon Bitcoin. And Bitcoin also saw that breakdown today. We tested our weekly trend line again. This RSI downtrend that we broke out from, we haven't fully backtested it for support. But despite how aggressive this selling was, over $5,000, I think, we went from 91.5 down to 84K from Sunday afternoon to Monday morning, and then had a decent bounce after the market closed today, getting up to 77K again. If we can get above this orange line, this 89K, that's really the area I want to see us sustain, which marks our previous lows here in this December and January consolidation range, these previous highs that we found resistance at. So Bitcoin has some more work to do, but just speaking on the structure, if this is also a low for Bitcoin and we are making that lower high, that's a good sign for recovery in itself. And this has been very oversold since the 6th of October in this persistent downtrend. And this could be the first sign, if this holds, of something flipping. And then we would want to pass this previous swing high to start flipping the trend into an uptrend for Bitcoin. Now, Solana, on the other hand, has been a bit weaker. And let me just hide some of my indicators and we'll go to the 4-hour. And we were talking about, let's remove the confluence model because it's a bit irrelevant for us right now on the 4-hour. Now, we were talking about Friday getting resistance at that 144. This is where we were chatting on, was it Wednesday or Friday? No, it was Friday because we came back up into it. That we should see more of a pullback. And we were talking about the idea of left shoulder, head, right shoulder. Well, I would have loved to find support at around 128, actually kind of right where we are right now. And with the weakness in the market, we wicked down a little bit. And it's getting slightly beyond tolerance for me for a clean head and shoulders pattern. We are making higher lows still. We didn't drop below the head, but we'll have to see. I just wouldn't put as much weight in this now with the deeper right shoulder. For a sign of strength on an inverse head and shoulder, if you get a shallower right shoulder, it's actually a stronger sign because it's telling you that even though there's consistent selling pressure at the neckline, the buyers are stepping in higher and pushing the price up. Here, it's telling you the opposite. The sellers are strong at 144 and there's still fear in the market and they're able to push it down really far before the buyers step in. So, I guess the one good thing it did, it reset our mean reversion and RSI on the 4-hour again, which it's done at about 4 points in this downtrend now. And hopefully we can start to set an uptrend with that higher low, although be it slightly, but getting above that 144.5 is really the big hurdle for Solana. Okay, so that is it for the charts. I hope that helps you identify some names with good setups right now that look like they are turning around and are about to recover. Some of these obviously are not long-term investments. They are shorter-term swing trades, but you have to determine how these fit into your strategy and what the positioning is that you want for your particular portfolio. I would suggest generally that it is still more a trader's environment than it is a long-term holder's environment, but that will of course shift after we see a bigger market correction, and we might get one of those as early as Q1. I'm not saying a full-on bear market, but a bit more of a pullback. So I hope this was helpful, and I will see you guys tomorrow for another daily recap. Bye for now.